Hello, it's Ryan from HappyTrader.io, CEO and head quant. Going to go over the ES year-to-date backtest, and this is some exciting stuff. I'm going to make this video very short because I'm dealing with a cold. So I'm going to show you this stuff right away. So we're going to load up the strategy. We have our parameters. We're just going to use $1,000, so one contract of the ES, and we're going to go ahead and just hit OK. No pyramiding, meaning no more than one order going in the same direction, none of that stuff. So we're just literally buying on the uptrend and selling on the downtrend. So again, this is just a long only strategy, and we're going to go ahead and just look at the chart, and we can see that our uptrend and downtrend signals. So the uptrend, you're going to see that buy AI, and the close order for the buy AI is on the downtrend. These are our trading signals. Now the buys and sells here are going to be potential trend reversals, and then of course our Luma trend is going to give us the heads up that, hey, we might be hitting a potential trading signal, as you can see here. And then if it's just not strong enough, even if the market does move a lot, and we don't get that signal, that's pretty normal, especially for something less volatile like the S&P 500. So let's go ahead and load up the strategy, and we're going to make sure our parameters are correct. They are all correct, and hit OK. We're going to go to confirm our dates. Deep back testing on TradingView, which, by the way, is the largest charting platform in the world, essentially, with a very robust back tester. That's why we developed our initial product for TradingView. It's a private indicator. You do have to subscribe for $47 a month, but that's besides the fact. TradingView is phenomenal, fantastic, and offers the ability for us to show our potential customers and our customers alike that we're able to produce some really good results, and we put in research and development to be able to allow our subscribers and folks to do well with the first predictive AI indicator, which is exactly what this is. Similar to how Steve Wozniak came out with the all the new chips on the Apple II, and then that went on to be the best-selling computer. We are much smaller than that. We are, in fact, a startup, but we are here to change the game for retail trading, and that's what we are all about, and that's what we've been about. And this is actually our second launch. So when looking at the back test, what we notice right off the bat is a very large percentage gain, and that's to be expected with a highly leveraged instrument. And a lot of folks don't realize just how much notional value they're actually playing with when they trade these futures contracts. Now, if we look at the list of trades, well, the first thing, actually, let's go back. You can see that the winning percentage, this is a common question that a lot of newer traders ask. They go, hey, to our support, what's the winning percentage for? Well, first off, it depends on your ticker that you're using, but generally speaking, our winning percentage on our long only, meaning when you take a trade long, so you buy on the uptrend and sell on the downtrend signal, is generally going to be between 28 and maybe 33%. So you're probably thinking, well, what? That doesn't make sense. We're only winning 1 out of 3 trades. How are we getting to $2,500 returns, like 2,500% returns, and 25 grand in actual US dollar returns? Well, the answer lies in the performance summary, and it also lies in the list of the trades. So you can see that the average losing trade, 297, you can see 0.14%. You can see that we're about 3 times larger, roughly, on our winners. It's between 3 to 4 times larger on average, depending on the ticker, of course. And the more volatile tickers will backtest a little bit differently than the less volatile tickers. Now, for a long only strategy, it needs to be a mobilized type of stock or index. And by mobilize, that means going in a direction. So it needs to be something that moves directionally. And the indexes tend to do that, where single stocks like Tesla and Apple are going to be a little more risky because there's something that's referred to as single stock risk. The brokers like to use that terminology a lot. But let's get back in and focus on this back test and how well we've done. For context, the market only does between 7 and 11% per year. You can see here that we are clearly handily blowing that away. All right, and then if we go to the list of trades, you can see, oh man, it's a bunch of losing trades, but look at the winning trade there. Look at the winning trade there, and you can see that our winners are way bigger than our losers, right? So that's where we're getting our graph, right? So a little bit of a drawdown right off the bat, and then we did have a 357% drawdown. That's a pretty big drawdown, but overall we did great at the end of the day. 592 trades, and that's just trading the futures for the ES. Now, if you were to trade the NASDAQ, we're back testing out on something more volatile, so an index that's more volatile, to be clear, not something like Tesla or Palantir or GameStop or something crazy. You can trade those stocks, but they're just really, really hard to trade. But on the NQ, the NASDAQ E-minis, the same exact, it's just the NQ instead of the ES over here. We back tested out even better than the ES, but the ES moves less. Generally speaking, it's about 16% year over year between the triple Qs and the ES, the outperformance. So that's just, it doesn't always outperform, but generally speaking, with the NASDAQ, how tech heavy it is, if you're looking for even more risk, if you have a higher risk appetite, the NQ is going to be much more appealing than the ES for you. So now that you've seen the back test, let's talk a little bit about the indicator. We're going to remove the back test and just look at it in its pure form on the 5-minute chart for today. And you can see that if we just go all the way over and we move our chart, because we have been going nothing but up, we can stretch the chart out and see some of our signals and really kind of see what's going on. And you can see that like on today, it's been a very choppy flat day. And you get these different opportunities to trade through these uptrend and downtrend signals. Now, one thing to note is when you get, let's say, one of these rippers where you get a buy signal and then you get almost an immediate uptrend signal, the closer the uptrend and the downtrend signal is to the buy and the sell signal, we've programmed this to basically mean there's more amplitude to the move. So a higher probability than if you see a downtrend signal on a green Illumitrend, don't trade that. And all the instructions are provided when you subscribe. But again, to keep things simple, this backtest was only buying on the uptrend signals, regardless of the Illumitrend or the buy sells, and selling on all of the downtrends. And that's a pretty solid return. So in our indicator, Happy Trader, Sentiment AI with Illumitrend is the name of the indicator. And Illumitrend is going to be in your green and your reds that you see here, signifying a potential uptrend, a potential downtrend that may potentially be followed by an actual signal, right? So the cool thing about this is that you can set alerts for the buy and the sell signals, and it works for all time frames, all tickers, whether you're trading futures, stock, pairs, whatever, even crypto coins, whatever you're trading out there. This is going to adapt to it. And that's credit to the TradingView team. And that's why we decided to develop our MVP, our minimum viable product, right here on TradingView, because so many of you traders are already using it, combined with the fact that it just has so many features. So really all you have to do is set your alerts and then just wait for the buy or sell signal. In this case, it would be a buy signal if you're doing a long only, and you would just buy on the uptrend, sell on the downtrend, buy on the uptrend, sell on the downtrend. And that's our year-to-date backtest for the ES. I don't want this video to run too long, but our indicator is a lot different because it uses non-lagging parameters and data sets and data points to generate our signals, where if you're just using like RSI, MACD, stuff like that, Heikin-Ashi, that's all lagging stuff. That's really just, it's no good at the end of the day. It doesn't backtest well, first off, and it's not going to tell you what the market is likely to do ahead of time. Whereas if you're using things that look under the hood of the market, such as what we do, I'm not going to give away all the secret sauce, but we do have the indicator available for subscription for $47 per month. You will be able to get a better, clearer idea, besides just seeing candles and just seeing more red than green or whatever, vice versa. And you'll be able to see exactly what's going on with the market. So again, this is Ryan from Happy Trader, and hopefully this backtest was informative. Plan on doing tons more educational videos for free. Go ahead and hit the subscribe button if you're not a subscriber. It's only going to help you make more money and learn more about trading at the bare minimum. So happy trading, have a great day, and stay safe out there.